Thank you, Fleur. Well, we couldn't hear the audio, but as if we did. So we saw quickly the winners. A quick introduction on the Euronext Trading Game. So this idea was created last year, and at the core of it was the belief of Euronext in financial literacy and the need and the aim to create something. To create the next generation of investors and market participants, and doing so through a simulated trading platform on all our 7 markets, which are Paris, Milan, Amsterdam, Dublin, Oslo, Brussels, and Lisbon, as you all know. Euronext also acquired recently at the end of last year Greece, but of course the data has not yet been integrated in the Euronext Trading Game, but I'm sure it will be soon. So as I mentioned, this was the first edition of the Euronext Trading Game. We had over 7,200 participants joining us in this journey and in this adventure from the 7 countries that I just mentioned. And it was a great success for us. Of course, we are always looking to make it better and to improve it. And we are already working on the second editions in how to expand it and how to develop it. But please feel free to suggest anything so any recommendation, any feedback that you may have on your personal experience and what has been good and what can be improved from your experience. So the final today is with our so the Euronext Trading Game, we have both, as you all know, but perhaps there are here people who haven't, I see, participated in the game, but we have 2 streams, either as individual or as clubs. Today we have the national finalists of individuals, which will present their investment strategies to our jury of experts, which I am very happy to see here today with us. So they are live from London. We have Tristan, Koyena, and Michael. If you quickly want to introduce yourself so that our finalists get to quickly know you and know who they are pitching to.
Nice to meet you, everyone. It's a pleasure to be here today. My name is Tristan. I'm working at Euronext for more than 6 years now. I started on the equities team in Paris. I'm now working on FX in London. I can't wait to see all your presentation and your pitch. And yeah, it's a great pleasure to be here.
Hi guys, I'm Koyena Pathak. I'm based out of London and I work for MTS division within Euronext in market data sales for fixed income. It's the fixed income arm of Euronext. And I'm so pleased to meet you and I can't wait to see what you have to present.
Hello everyone, my name is Michael. Pleasure to meet you all. Before working at Euronext, I worked as a derivatives broker for 5 years at a firm called Tradition, and I work at Euronext in derivatives trading, so leading our business development for all equity derivatives initiatives. I'm very much looking forward to seeing all the pictures today and seeing how you've constructed everything. Nice to meet you all.
Thank you, Tristan, Michael, and Koyena. Without further ado, I would start with our pitches. So we've decided to go in alphabetical order based on your surname. So we will have Paul Curtin from Ireland, University College of Cork first, then David Etundi from France, Université d'Orléans, Eduardo Gazzeri, Italy, from SAP Business School, Quentin Nee, Belgium, from University of Ghent, Antoine Patalavine from Portugal, Nova Business School, Mustafa Tuktein from the Netherlands, Delft University of Technology. That is the order we're going to go in. Without further ado, I would start, and I would like to congratulate all for already reaching this quite remarkable step. I hope you had you enjoyed the journey up to here and the journey that you have behind you. But I also hope you will enjoy and learn as much from this pitch battle and from presenting to our fantastic jury. I would also like, of course, to thank Nextwise for being our partner and supporting us in this first edition, and everyone at Euronext who helped this initiative come to life. Let's start. Let's get started, and please remember that you have 5 minutes, and this will then be followed by a couple of questions from our jury. So let's start with Paul. Are you here? I hope you are. I can't see the individual.
Unfortunately, Paul is not here.
Isn't
He has
here.
a personal
Okay.
urgence. So
Oh,
we'll
okay.
start
So
with David.
he's not joining. Let's start with David then from France. Are you here?
Yes, I'm here. Hi,
Okay,
hi everyone.
fantastic. Hello, David. Hello, David. The floor is yours. Please go ahead.
Okay, I will share my presentation.
Of course.
So hello everyone. First and foremost, thank you for your presence today, and a special thanks to Euronext and Nextwise. My name is David Etundi, and today I'm going to walk you through my portfolio strategy. For investment in process, my fund is composed of over 80% European value equities, with the remaining allocation consisting of ETF used to capture commodity performance. My objective is to generate alpha while outperforming my benchmark is the Eurostoxx 50. I use a top-down approach, starting with macroeconomic indicators like the PMI, and down to fundamental stocks selection using metrics like the price-earning ratio. I also prioritize low beta foundation to protect capital against market correction. To boost returns, I actively capture volatility around major catalysts, trading micro events like earning announcements and macro shocks like central banks' decision or geopolitical crisis. So event-driven strategy. For instance, Kevin's Wash and Silver, I will explain my one of my strategy. I use an event-driven strategy to exploit market overreaction. A prime example is my silver trade. In January, silver traded at $114. Then Kevin Walsh, our Walkage Feds was nominated on the Feds, triggered panic, causing a 30% sell-off. On February 2nd, the price crashed to $77. I seized this asymmetric buying opportunity, aligning with Goldman Sachs analysts, $85 to 100 targets dollar. Sorry. We share the same rationale. A Fed nomination doesn't erase physical supply deficit or booming IA and energy demands. Fundamentals quickly prevailed. I closed my position 40 hours later at $82, obtaining an 8% net return in just 2 days by capitalizing on irrational market noise. So performance review and risk management. In 6 months, my strategy has driven the portfolio finance valuation to $75,000. As a result, I'm closing with a net P&L of over €25,000, representing an overall return of 50%. As you can see on this chart, this result is driven by consistent performance over the past several months. Regarding, if we see the chart, we can see a volatility. We can see a high performance, during the January and February months. It's the earning assessment period. So I win a lot of performance during this period, and also during March and April, I won a lot of performance because the Iran war starting during this period, and I create performance with this volatility. So regarding risk management, my daily dashboard generates with Optimum confirm strict compliance with UCITS regulations. My Monte Carlo VaR stands at 11%. It's an optimal level. It sits perfectly within the 8 to 12% target range and remains well below the 20% regulatory selling. My performance is therefore achieved under total risk control. So value proposition in conclusion, dear investor, why should you choose me? The answer comes down to two main reasons. First, my ability to generate alpha. While the market returns 7%, I achieve 50%. This 43% alpha is clear evidence that my active management creates genuine value that a simple ETF simply cannot offer. Second, capital protection. My Sharpe ratio stands at 2.86. It's an outstanding metric, proving that every unit of risks taken was handsomely rewarded. To summarize, I beat the market while protecting your capital. So thank you for your attention.
Thank you, David, and congrats on these achievements. Really remarkable. I'll let our jury ask a couple of questions if they do, or if not, we can move on to the next picture.
Thank you so much for this presentation, David. Very clear. Super cool to have a slides to rely on. I have a quick question though, because your return are obviously quite impressive. Sharpe ratio is quite nice as well. But did you take any action to mitigate the risk that you've taken? Because it does seem like your portfolio is very much focused on equities and very much focused on event trading, and that's fine. But did you take any measure to mitigate the risk that you've taken on your equities?
Yes. For example, I don't say this clearly, but I use a lot of equities, a lot of defensive equities. I say defensive equities because I use equities with a neutral beta for neutralize the market effects. And I think during a volatility period like now, we can defend I can defend my portfolio with those equities.
Fully agree with you. That's very clear. But you could have bought, for instance, as well, a few more defensive stuff like VSTOXX, which is the same as the VIX, but for European securities. It would have reduced a bit your return, but in case the market would have gone on the other side, it would have reduced your loss. But it's just like trying to manage your risk. Obviously, the returns are very great and the market is going into your direction, and that's cool, but it won't always be the case.
Yes.
And it's a nice way to mitigate your risk, if I may say. But that's impressive result and return.
Yes, and if I can add, I adapt my strategy all time in function of the macroeconomics events. And for example, at the end of the competition today, before the end, the Iran wars was close to be ending, but so I changed my philosophy to have a portfolio who follow not a neutral beta, but a beta close to 1 to have the best of the volatility.
Very clear.
Okay, can I ask something? Yes. You put a lot of, firstly, well done. And secondly, I wanted to ask that I have two questions. One, you put a lot of focus on the silver trade. And in first, you said that it was 114th came to 77. And also you mentioned about the nomination of Kevin Marsh. So if the nomination truly doesn't affect the silver supply, why mention it at all? And do you think, because you positioned in November to April, is it a seasonal trade or is there a historical basis as to why you chose that particular timeline? Because the silver boost was the highest in the history of silver boost, right? So do you think that that trigger is is it a well thought out trigger? Because it's not something that you can say that you just got lucky on the silver trade, right? Is my question clear? Yes.
The Kevin Marsh event, it's one of many examples of my position on the market, but also my strategy is to react on the different events or anticipate the different events, but also my global strategy is to defend my portfolio against the market, because when we began the competition, the markets are very high. So my first strategy is to have a portfolio who protect if the markets go down.
Okay. Also must mention that 2.86 is a really high sharp, and even professional funds, like most funds, would not deliver. So I see that you have done it over a very small, like November to April, so that the consideration might be a little concentrated and skewed, but well done on getting that sharp. Usually funds don't get 2.86. Anything above 2 is stellar, to be honest.
Any question in my head?
No, so good if we ask 3 questions.
No more questions?
No more questions.
No more questions. Fantastic. Thank you so much, David, and congrats. It's really remarkable what you did and how you presented. Next up, we have Edoardo Gazzeri from Italy.
Yes.
Eduardo,
Yes, I'm here, fortunately.
Feel free, the floor is yours.
Yeah, thank you. Before starting, I think me and David used Cloud to create our presentation, so the template will be similar. It's a really funny thing,
Disclaimer, in the age of AI.
They did very nice presentation, and maybe it's more for alignment for everyone. Maybe another one.
Great.
Put the same presentation. Now I will share my screen.
Thanks for letting us know.
Yeah. Hi everyone. My name is Eduardo. Edward in Old English, which means guardian of the wealth. And based on that, I built my portfolio, which I called the European Fortress, which basically is based on the moat investing. If you are not familiar with the term, it's created by Warren Buffett. And basically, you buy stocks that have a moat against competitors to try to buy high quality business. I also added on top of that a quality catalyst factor, which is in the next 6 months at the time of the challenge. If there was a catalyst on that specific action, I would buy it. As you can see, my return is quite nice, 15% with a volatility of 9.6. This is not really true, since in the challenge I was more like at 6-7% volatility, and that was actually my goal. But beside that, I choose these strategies since I'm not coming from a financial background, but more a business side. Actually, I don't think I will never work in a fund, but probably in a strategic investment firm, no, a strategic consulting firm. So that's why I choose this this style of investing. As you can see, I divided, similar to David, a 7% direct European equities with some commodities at 10%, 7% of ETF, such as the EU Growth and S&P 500, 3% bond to lower the volatility to cover me from that, and 10% of cash. This 10% is not a fixed percentage, since I used to leave that cash for power acquisition power. So if I really like a stock, I will buy it and be much lower on cash. But if I don't have any ideas to buy any stocks, I will leave it like that. My trades were actually really long, and I did a lot of trades. My number of securities was constant, about 35 medium long-term trades. And the sector I really invested in was industrial, especially with the infrastructure and electrification and defense, and all business that have steady cash flows, like a simple sample, utilities and healthcare. For ESG, I put everything under Article 8. Probably I will exclude defense if ESG points were added in the next edition. So why not for the organizer, that probably I will act different. And I divided the challenge in main 4 parts. The first part, I really didn't understand how it worked. So I opened on too concentrated on Italian financial and luxury band. The performance was nice, but there was really no an investment thesis behind it. There was no coherence. So I just sold everything and start from scratch. And from the sector, that dividing section that I showed you earlier. Then in January, I really invested, as I said, in infrastructure and defense. In February, where there was the growth sale, I didn't chase the hype. I just buy other boring business that I really liked. And in March, I just bought some low cyclical sites. As you can see on the bottom side, I beat every crisis, besides from the Euro crisis. No way, but only by 5% less. This is the last slide. I really wanted to give you a nice overview, but I couldn't, since these are the top performance. What I really wanted to show you was my entire portfolio, and my trades, since most of them was in the range of -5% and 10%. These are the top and lower performance, divided by open position and closed position. On the right side, you see the victorious champions, which are actually the close position, but I don't really like them. For example, Total Energy, I could never predict that the Strait of Hormuz will close. So them that don't show really my strategy. Actually, in the Royal Guard, so the open position, Getlink, it's my favorite stock. I don't know if you are familiar with that. It's the company that manage the tunnel between France and England. After the war, I thought there is only one way three ways to get on UK. Two of them are boat and plane, so they consume a lot of oil. Let's get on the train, and that really work out and give you a 20%. All other stocks, beside from the precious metal, really nice ones. I really love to have time to explain you all them, but we don't have to. On the right side, we have the Wounded Warriors. I think for this challenge, beside from the winning part of everything, I really learned a lot from them, since what I did was not following my thesis. I just bought it without really be coherent to the mod investing, beside from Airbus. I bought Airbus one day, and the day later, there was a crisis of all the planes. So beside from that, I learned a lot. I didn't want to steal you a lot of time, so I will conclude here my presentation. What I want to say is that for every participant, beside from the winning one, it's a really cool and fun way to learn. For me, for example, that didn't come to from a business, a financial background. And I say to every my friends, so next time you should do it. It's very fun. You learn a lot, and that's it. Thank you for your attention. I hope there are not hard questions for me.
Thank you, Leonardo, for this super engaging presentation and for your feedback. Jerry, do you have any questions for? Not hard though. He asked for
not hard, please.
Don't make any promises. No, Eduardo, well done, well presented. It was a nice pitch. I had a question for you with regards to your asset mix. So you had around 70% in European equities, but thereafter you had, I think it was 4 or 5 different asset classes. Could you explain to me how you determined the weighting for each asset class that you chose?
Basically, I really like stocks, so I was the most confident on them. So I really wanted to bet on what I know. I'm not really familiar with commodities and ETF. So what I did was I took this percentage, the 70%, and work on them. Then I choose the simplest commodities. I choose gold, silver, and agriculture, and I divided them in the portfolio. So that's basically my knowledge.
Okay, so you chose equities because you like equities, and then you took a, let's say, an even split across other asset classes to try and diversify. Is that right?
Yes, it's all right.
Okay. Okay, thank you.
Could I ask one question? Just one. I saw there was 10% of cash that you have retained in your portfolio.
Yeah.
Because I followed that you have been following macro events quite, it was very active fund management, I would say. What would be that one deployment trigger? At what point would you think that I could let go of the cash and replace it with equities or any of the other components within your portfolio?
As I said, the 10% one was just from this last snapshot. The trigger that I use the most is when I read about a really nice company on a journal, and I study them and I just buy it. There is no trigger, no trigger about the market. It's all about macro events and my personal knowledge.
So there would be no FX overlay on it, which like you wouldn't link it to inflation or any other macro KPIs. It would
Yes,
just be...
obviously. Macro events, yes, like inflation.
Okay.
Yes. I'm not explaining really well, but like everything you see on a journal, I can read it. So I was based on that.
Very honest. Thank you so much.
Thank you.
Thank you, Eduardo, for the presentation. Yeah, I like the diversification bit. Maybe your return are a bit less than the previous one, but at least you're exposed on more assets, which is quite good. We've seen that you invest in plenty of companies. There is some winners, some losers, but the more you diversify, of course, you cannot have like 100% return, but the more your portfolio is robust, so it's in line with your presentation. Thank you for that.
Thank you so much for the feedback. I leave the stage for the next participant.
Thank you, Eduardo, and thank you, Jerry, for your questions. We have lined up Quentin from Belgium.
Hi, thanks for having me.
Great. Hi,
Can
Quentin.
you guys hear me?
Yes, perfectly. The floor is yours.
Sure. Okay, can you guys see the presentation?
Yep.
Yes.
Yep. Okay, great. Okay, so good to be back after the final from the pilot launch. Actually, I take the place of Pierre because I was in second place, so I didn't really have a lot of time to prepare for this pitch. But anyway, also made some slides also with Claude, like the previous two guys. But yeah, in general, I take maybe a bit of an unconventional approach for this trading game. I do more tactical analysis and also a bit event driven. So my strategy was actually in two parts. So first of all, I'm a strong believer in silver. So I went with a big chunk of my capital in the silver trade from the beginning on. But after some months, I realized that to win the game, I had to score some points on diversification. So that's the second phase where I just spread some money across different assets and also based on technical indicators. So the silver thesis for me comes down to three catalysts. First of all, silver is in a structural deficit. So there's a lot of demand, but supply can't really follow, and there aren't really a lot of discoveries. So driven by industrial demand a lot, so the data centers, semiconductors, and solar panels. Then next, the macro is, I think, really important. My conviction was and still is that the Fed will still be cutting rates to relieve the US debt burden because interest rates are high and they have to come down to make the interest rate burden feasible. And then on the other hand, we have the inflation story. So in my opinion, we will stay in a higher inflationary scenario. So combine these two, higher inflation with lower rates, and then real rates start dropping, and real rates start dropping. Yeah, hard assets become more attractive as the opportunity cost drops. And then a second component is the dollar. I'm a strong believer of a weaker dollar. I think it will continue. That was my conviction when the game started, and I think it will keep on going, certainly as long as Trump is in power, because he explicitly wants a weaker dollar, and a weaker dollar, yeah, drives up the prices of hard assets because they're all priced in dollar. And then finally, yeah, technical. This is on the long-term view. Silver going into new all-time highs, so the supply above it, there is none. So in my opinion, all the catalysts coming together with then silver going into new all-time highs. Yeah, I expected a boom. So that's why I have put a lot of my capital in silver. Very important, luck. Luck is a part of the strategy, of course. Things could have changed in my assumptions. Things could have been wrong, and then it would have went the other way. However, I always go risk first, so always with stop losses in case things go wrong. Then for phase two, the equity diversification. So what is the goal? The goal is to score some points on diversification and to obtain that distribution skewed to the right. So a lot of small losses and a couple of high wins is the goal. So what did I do? I put all the Euronext stocks in my TradingView screener. I put on all my indicators I like to see, for example, price above the moving averages, etc. And then I tried to diversify across the different sectors to obtain some points there. And then I wanted to put approximately 5%, some more, some a bit less, in each stock I bought, and then let the winners go and cut your losses short. But so yeah, in the end, you can see most of the return was driven by the silver trade and a bit of gold and gold mining. So in the end, this is the distribution. So it went quite well. So you can see my average loss 6%, while the average gain is so 20% over a return period of 41 days, and then almost 2/3 of the trades went well, only 1/3 didn't went well. And so in the end, you get the distribution skewed to the right, and this way you become profitable on the long term. So yeah, I suggest that was the end of the presentation. I suggest you ask maybe some questions where you need clarification, because I know the presentation is quite short.
Thank you so much, Quentin. And I love it because we had 3 presentations with 3 different type of investment, and that's totally fine. I do like your position. You took a bet. It worked. So congratulations for that. Obviously, you said it yourself. Diversification is not really what you were chasing for, but that's fine. I mean, as soon as you're clear with what you're doing, that's totally fine. And you took a bet. You said that it could have not worked. It worked on your case. So congratulations for that. Now, being a bit more professional per se, this is something you could do on the retail space, i.e. with your own money. This is not something that you would be able to do in a working environment. No one will ever let you invest all your money on silver and just pray for it to hit 120. Luckily for you, it hit 120, but I don't know if you're still a believer in silver right now. Silver, it's still in the range of 70 to 80. So was it just a retail run on silver, or a long-term trend, and silver should be higher? This I'll let you decide on your own consideration. But yeah, I mean, congratulations for taking the bet, making the money. But yeah, in a more working environment, this wouldn't be possible. But still,
of course, yeah, I know.
I mean, if I were you, I would have just, okay, that's fine, because you did a bit of equity diversification at the end because you had to, if I may say.
Correct. Yep.
Your investment was directional, and that's fine to take a directional trade, but usually you do not bear it for more than 24 hours or even less. But yeah, well done.
Correct. Yeah, thanks. Yeah, I was here in the pilot launch final too, and then I shorted the S&P, and then I got like the same the same comments. Yeah, I know.
That's fine. I mean, this is your strategy of investment, and you stick to it. So on that, you exposed it very well. So we cannot say anything. But in a real world environment, this is a bit more difficult to defend.
Of course, I know. Yep.
I don't know if you guys.
Yeah, 59.8% draw. Like, it's stellar returns in 6 months. Of course, the silver, execution had a lot to do with it. Wanted to know, what was the maximum drawdown at any point? Did you see, like, what was the maximum drawdown in these 6 months?
Maximum drawdown for me, not a lot, because it only went up in the period I was in. But so most of the time I take like a max stop loss of like 10%. Max. It depends on the return you expect, but for the max drawdown, I don't have the statistics. I don't really know.
Well, you were trading on silver between October to Jan, if I'm correct, according to your presentation, right?
Yep, correct.
And then you did an equity diversification, or you went a bit more equity heavy. Was there any trigger, or was it just one day you decided to move to equities at this point, or was silver gradually on the decline, and you realized that to preserve profits and to guard well, you would need to move to equity? What was the trigger?
So during the period I was invested in silver, I consistently like sold a bit into strength, and if I saw it went well, I bought again a bit and then sold again a bit into strength. But then this is the slides. This is why I put it in. Also, just a luck on my part, because I actually hadn't. I think I didn't own any silver anymore after the big crash. So, okay, because I thought, okay, it's getting way too overextended because it's going exponentially up and it's not sustainable like this. So at the end, I sold everything before the crash, and that's where
You're long
I started
silver for
buying.
longer periods of time, right? Because you said that semiconductors are a thing of the future mainly.
Yep.
So did you totally like reduce your exposure on silver?
So the thing is, the trading game is for a period of 7 months, and I want to maximize the return. But for example, in my personal portfolio, I'm still long silver. So that's a bit the trade-off you have to make for the game.
Okay. All right. Thank you.
Sorry, one final question from my side. Thanks for the presentation. So when you rotated into equities, I didn't see, maybe I missed it, but were you using a benchmark for your equity positions? If so, what were you using?
A benchmark, you mean to compare the returns to?
Yes.
No, not. I follow the market on a daily basis, so I know if I'm outperforming or not. Right now, I don't have the statistics as I have said. But no, in general, also in my personal portfolio, I trade to outperform, so I don't go for 10% a year. I try to, as you see here, I try to have like, if you have an average gain, you see the expected return, for example, over a period of 41 days. You know you're beating, if you know what I mean. So I know during the game I
Any
didn't really
sense
compare
according to
with.
markets?
Sorry.
It's just a sense check according to following the market every day, right? Like what's happening and yeah.
Of course,
That makes
yeah.
sense. Okay.
Yeah, so just in terms of the feedback, so like obviously the returns are super great, but going back to Tristan's point, if you're, I guess the framing of this is to try and pitch to investors, right? You will always need a benchmark to compare versus to give some kind of exactly a sense check. So, something to consider going forwards. If you are ever in that position, you would need some kind of benchmarking to give some kind of context. Even though, like you say, you've done some, super great returns. So something to consider. Otherwise, well done on your returns.
Great. Thanks a lot.
Thank you.
Perfect. Thank you all. On to Antoine from Nova Business School. Are you with us, Antoine?
Yes. Just a second. I'm pulling up the presentation.
Perfect. Thank
Okay.
you.
Perfect.
The floor is yours.
I'm gonna put this like this. Well, hello everyone. I'm Antoine Patarabin. I represent Portugal in this Euronext Trading Game, and I'm gonna talk about my portfolio and my investment philosophy. So I try to generate alpha through inefficient markets and macro dislocations. There you go. So my portfolio had a dual engine investment strategy. The core of it was European small and mid caps. Because I have the conviction that it's the most efficient way to outperform the benchmark in Europe, finding those value companies, very high quality, that are mispriced due to that analysts don't follow them so much compared to the large caps. And the other side of the portfolio was a bit of the macro convictions I had. So at the start of the trading competition, I had a big conviction in energy, mainly with oil and in hard assets. So I got exposed to them via ETFs and also via the large caps European stocks, but also combining it with the European small and mid cap. And the second part of this macro conviction was the emerging markets, Latin America and Asia, due to a weaker dollar and other macro convictions I had of a transition more to these markets with a higher growth, mainly in politics and in other contexts. A bit of the decision-making process I had to choose the equities was starting by a fundamental screening with various ratios. Depending on each sector, I twisted a bit these ratios to accommodate to sector-specific measurements and financials. Then I tried to do a little microanalysis, maybe to explain why these equities were undervalued. Maybe there was a political reason or some type of law or something. So I tried to understand it in a more macro perspective. And then once I got the equities I wanted from the screening, I tried to quantify the risk of adding it to the portfolio. So to try to be always balanced compared to the portfolio. This helped me avoid value traps, managing macro exposure actively, and to quantify the risk implied in each decision I took. And then a bit about the numbers. I try to have risk-adjusted returns. That's why my portfolio volatility was below the benchmark at 11.8% compared to 16% for the benchmark. This is why there was also a lower beta of 0.6. This demonstrates my whole contrarian view also compared to the market. And a key aspect was that I always maintain a diversified portfolio with more or less 40 positions during all the time span, diversified between stocks, ETF, bonds, and commodities. And I had a rule of a max weight of 5% for individual positions. So I think that's how I was looking for deliver alpha and have this discipline. Obviously, I try to have lower systematic risks than the market. And well, I think this strategy is interesting for the long term. Obviously, in a 7-month span, it's quite difficult because some value plays didn't work out yet, in my view. But I try to keep it risk-adjusted returns, have a good Sharpe ratio, and quantify the risk of my portfolio. That's what I have for today. I hope you like the presentation. Thank you.
Yeah, I've got a question. Thank you very much for the presentation. I had a question with you with regards to your asset allocation choice. So you put a big weighting towards European small and mid caps.
Yeah.
As a trader, what considerations from an execution perspective do you think differ between trading small and mid caps in equities versus large blue chip equities?
Well, I think there's a lot of things to take into account. Mainly in the small caps, obviously there's less liquidity, so there's more volatility. So we need to take that into account always. That's why my bet sizes in the small caps were smaller usually than the medium cap or even the large caps I bought for my micro convictions. So that was a bit the difference between the executions. That's why in my portfolio the returns maybe are not so great. Also, I saw a lot of small caps and medium caps that had great performance, but obviously the bet size, the weight of this position in the portfolio was quite small, so it didn't contribute as significantly as other positions. But it was part of my rules I imposed to construct my portfolio. So it was something that was expected.
Okay. Yeah. Yeah, I agree. Yeah, man, your answer is logical, makes sense. And exactly that. Whilst you might be trading, you'd be crossing a bigger spread when you're trading because there's a lack of liquidity. Maybe the upside is potentially bigger, maybe more potential. So it makes sense with the smaller weightings as well. Okay. Thank you very much.
I think I read that you had EU SMIDs and also you got LATAM and Asian EM. They are not very correlated. So if there was, right now we're in the middle of a war. So it comes, there's a risk off event. How do you allocate? Like, I just want to understand, like at a major risk off event, how would you weight? Like, what will the weighting for each of these would be? Because I didn't have much clarity on how much EU SMIDs and on LATAM. Sorry, I skipped it maybe.
Yeah, well, the two, the LATAM and Asia are quite decorrelated because Latin America is more focused on mining and energy. So that's how that's my view a little bit on why invest in Latin America. That gives you the upside in those sectors. That's what I was looking for. And in the Asia conviction, the ETF I bought, it was more to get some exposure to this tech boom that we're having now. So that's why they are quite uncorrelated, and that was what I was looking for.
It was sectoral, what you're saying, sorry to cut you, it was sectoral consideration, right? Like where you considered sectors. You said that throughout your throughout your presentation that it was a very risk managed. That's something I really like because when you talk about institutional fund managers, risk is one of the prime things that risk, like everything is priced according to risk parameters. So Asia and Latin, they are always perceived of as high yield and very risky, right? So did you take risk mitigation into consideration as well when you were picking these stocks on? Like I don't have personally, I don't have much idea about the mining in LATAM. So are they risk mitigated or are they susceptible to like political disturbances and turmoil?
I have two things to mention there. The size of these positions were quite small because of the risk they implied. In Asia, there was a lot of momentum, as we know, so it was expected. We could expect a correction, at least from my view, as a contrarian. And in the other hand, LATAM was completely the opposite. It was very discounted. It was very hit. And I found it really cheap in a value sense. So yeah, and these two positions, the aim was that they could like neutralize between each other, in the sense that if the tech boom continued in Asia, I will have the upside in that side, and in vice versa, if it we'll have an oil shock as we did, LATAM will rally as it did. And so that was a bit my view when placing these positions, even if they were very small. I think it contributed interestingly to the portfolio, and yeah, so it was risk mitigated. It was very small positions.
Okay, thank you. Well answered.
Antoine, I really like your strategy, to be honest. I mean, you have a clear strategy, a clear decision process, and you stick to it. So congratulations for that. The fact that you focus on small and mid are quite interesting as well. Once again, this is a stake to take. You took it. You have a clear process in the decision making to select the stock you're investing in. So congratulations for that. This is more professional in the sense that this could probably apply to a real fund, if I may say. But the thing is, with this kind of strategy, as you said, there is a lot of value stock in becoming value stock on this PMI investment, small and mid investment. So this kind of investment work well over the very long term. So it might take a couple of years for your fund to pick up decent returns. So a 6 months trading windows to implement this kind of strategy might not be the best, but still it's a super nice one. but take into consideration the time frame of your investors as well. If it's for very short term, you can be a bit more bullish as Quentin. Keep your way of processing, but be a bit more bullish if your investors are telling you that it's a 1 to 2 years investment and not 10 years plus. But otherwise, well done for your construction of portfolio.
Thank you so much.
Thank you, Antoine. Thank you, Koyena, Christian, and Michael. Moving on to Mustafa, last but not least. Are you with us?
Yes, I'm here. Should
Oh,
I
fantastic.
share my screen or is the presentation on your side?
We do
okay,
have with
probably I share.
As you prefer. I think it's
as
the
you
same.
prefer.
Okay.
Okay, maybe it's better that
let
you
me-
share it so that you know when to change slide and everything.
Okay. So yes, this should be
Perfect.
the
Good luck.
window. Okay. So can you see it? So because now I don't have the
Yep, we can see it.
is it full screen? Because now I don't have my Teams
It's
open,
not-
but just this slide.
Yeah, it's not full screen, but perhaps if you can zoom in a bit.
This way. So now it should
perfect.
be better. Yes.
Yeah,
Okay.
yeah.
Okay, so I'm starting. Today I will be presenting the investment strategy that secured me the first place in Netherlands. Before that, I would like to introduce myself. My name is Mustafa and I'm doing my master's in applied mathematics at TU Delft, specializing in financial engineering. Also, I had my bachelor's in TU Delft as well in aerospace. Moving on. So early into the challenge, I noticed everyone can build a Markowitz efficient frontier, and I had to do something else that can create the edge, and which brings us to the visual on this slide. So Trump has repeatedly influenced the markets through last year, though many of these moves partially faded over the weekends. My idea was, what if Trump induced a shock that does not recover quickly? And for data, I extracted every ticker available for the challenge, which was around 1,600. Then I filtered them for liquidity, which I was targeting above 30,000 US dollars mean over the last 60 trading days. For political risk, I downloaded the True Social feed of Trump and filtered them using keywords like I had to filter them because apparently he posted above 5,000 posts during a year. So I filtered them using keywords like tariffs, economy, S&P, Powell, etc., which reduced it into 1,200, around 1,200. Which corresponds to 275 trading days of the year. Later on, I will use this Trump time series to create a correlation for each individual ticker with respect to did Trump tweet that day. So moving to the next slide, yes. Once I had my efficient frontier constructed, I noticed a problem over time. My frontier was sliding, so I had to rebalance my weights every day, almost. So I had to fix it. And using some of the tricks from my high dimensional probability course, I eliminated the weak eigenvalues from my covariance matrix, which I used to build this efficient frontier, which is essential to eliminate the weak eigenvalues from my covariance matrix and replace them with the average, which is a complicated task. But effectively what I'm doing is I'm using this tangent portfolio generated from this efficient frontier, not the classical efficient frontier. Then, so I have also generated the minimal variance solution and tangent solution, but I'm using the tangent solution because I have to win the challenge. So I am accepting some volatility. Then extending the idea to Trump factor beyond the standard optimizer, I had incorporated the correlation of each individual ticker with the did Trump tweet that day, the thing I mentioned. Because then I linearly combined the regular covariance matrix with this Trump correlation matrix to generate a 3D Markowitz surface. Then use the portfolio generated by that. As you can see, my the brown dot in this slide is my portfolio in this space. So to say, and as a result, I have this. Yes, this slide is for the results and comparison. So overall, after 137 days since the conception of my portfolio, it generated above 2 Sharpe ratio with a 7% cumulative return and 5.5% volatility, which is much lower, also much lower drawdown compared to the S&P. My max drawdown was 2.4%, which for S&P it was 9%. So overall, it is more stable with better returns, which is to be expected given the recent events. Also, I tested my hypothesis. So if my hypothesis made sense, in this slide, you can see a portfolio generated with respect to Trump beta factor and a portfolio that doesn't take into account at the beginning of the October. And at the 8th of the October, there was Trump posted that we are back to 100% tariffs with China. So I considered that as a shock factor. And as you can see here, the portfolio generated with the Trump beta factor in mind performs has a less drawdown after the shock, and it recovers better compared to that portfolio. But as you can see, this is a short time scale, so it's over almost a month, a bit longer. So in a longer time scale, we have I'm skipping this slide, but I can answer any questions related to that. And over a longer time span, this is my portfolio compared with the S&P 500 over the entire challenge duration. And yes, as you can see, my hypothesis was correct, taking into account the political risk. Starting around the January, my portfolio performed better. And with this, I think I'm concluding my presentation, and I'm open to any questions you may have. Wait. So, yes.
Thank
So,
you
yes.
very much for that presentation.
I hope it was 5 minutes.
I didn't count, but I'm sure you're fine. Don't worry.
Okay.
Thank you very much for the presentation. You've taken a very obviously quantitative approach to your portfolio construction, which I'm a fan of. Well done with that. And nice to see that you've still managed to beat the benchmark. A quite interesting investment thesis, because obviously you have the taco trades at the moment, which people are talking a lot about. So you've taken like a reverse taco idea. Question: how did you determine the so-called, I think you call them Trump betas per stock?
Yeah. So what I did was, once I had did Trump tweet something related to economics that day, I also included did a VIX jump more than 5% on that day as well. Then using per equity, I took the correlation between that time series and the return of that equity. Once I have this for every not equity, but every ticker available in the Euronext universe, using that, I constructed the correlation matrix for each asset with this did Trump tweet that day index, and I took it into my covariance matrix with a linear combination. So that was the mechanism.
Yeah. Okay. Makes sense. Okay. Thank you.
I had a question regarding, you said that you took Trump's social feed. I assume it's Twitter only, or was there other social feeds that you took into consideration?
I too. So apparently there's a GitHub archive with his Truth Social feed. So yes, it's only Truth Social, but I didn't take into White House accounts, etc. But just his Truth Social page.
And they would be more predictive. So were they, how did you factor in the time lags, or like when, because you're doing it in reverse, right? So every stock
Yes.
absorption, how did you time it?
So I used, since I'm using Yahoo Finance for the ticker data, I set the pandas set time to 0, so they are matched. So it should be, yeah.
Okay. Yeah, makes sense.
Thank you so much for this presentation, Mustafa.
Thank you.
We will have need probably a bit more time to enter into more detail on the. You explained the stock process, but I would have been keen to see the stocks you've selected and why according to your model. So I'd like to
Yes,
say
I
the
have
first.
my weights saved,
Yeah.
so I can maybe share the weights as well.
That would be great after the presentation, but big picture is I do like your strategy as well a lot. I mean, it's completely different than what the other did, and we're super lucky because we had like a 5 presentation with plenty of different strategies. So I do like the quantitative approach because right now, once again, in the real world environment, we cannot deal without data. So we must use the data. It might not say that the data are always right, but it can give you very nice hints.
Yes.
So congratulations for the work done there. And yeah, I don't have any specific question. Obviously, we don't have time to enter into the detail of your model, but that would have been interesting. But it's only a 5 minutes presentation, and you ended it well. So congratulations.
Thank you.
Perfect. Thank you, Mustafa, and thank you to all the pitchers. It was super interesting listening to you. I think the best thing right now is that we leave, let's say, 10 minutes to the jury, or 10 minutes to the jury to discuss and discuss ideas and discuss their evaluations and opinions on these pitches, and then we will then have the official winner for the individual category of the Euronext trading game. So let's all reconvene in 10 minutes. Perfect. Thank you.
Perfect. Thank you.
Okay, I see people coming back. Are we ready? Do we have finalists? Do we have a winner? Sorry.
We're finalizing the detail, but I think
You are muted.
no.
No, we can hear you. Yeah, we can hear you. We can hear you.
We are just
okay.
finalizing the detail, but now I think that it wasn't that easy to decide, but we went through. We have our winners.
Okay,
So,
perfect.
So we can do the top three.
So,
Victoria, what would you like us to do?
As you all know, only the first the winner will receive the prize of shadowing the local CEO of their market for 1 day. But of course, I think we can do top three so that you guys can elaborate a bit more on the performance of the people that you think were close enough to were good and close enough to be fine, to be winners.
Okay.
So whenever you want.
All right, drum roll.
Drum roll.
So maybe just before giving third place, well done to everybody. It sounds like it's been a good bit of work over the last few months. So congratulations. You all were in the positive, which is a good sign as well. That's a good first step. So so look, without further ado, in third place, we thought Eduardo. We thought you gave a very interesting pitch, but a presentation and thesis. But in particular, we thought you presented it exceptionally well. So well done for that. Third place. In second place, and it was tight between 1 and 2. I have to say, we gave second place to Antoine. So Antoine, well done for second place. Really good job. I think we were all in agreement that your investment thesis in particular was your strength, having the mix of small to mid cap and mid caps with other asset classes. It was an interesting choice and angle that you took. So congratulations on your second place.
Thank you.
But in first place, so we decided to give it to Mustafa. So well done, Mustafa. You win the first place for the Euronext Trading Game. It was very well constructed in terms of your portfolio construction. You took it was clear you took a lot of detail in your benchmarks, your portfolio performance valuation. So congratulations, really good presentation. It was let's say an original idea to take your investment thesis of what Trump does in a sustained way, no shock. So we like that. Congratulations, Mustafa, and again, well done to everybody for getting to this stage. Really good job.
Thank you. Thank you.
Congratulations, Mustafa. You will be spending the day with René. Also, my apologies throughout for my accents. I know they're not the best and quite Italian. René van Vlerken, the CEO of Euronext Amsterdam. We will be in touch with you on all the logistics and when we will be able to organize this. Congrats to all of you. You were fantastic. Thank you so much to the jury. You really lightened this up, and your questions were super interesting. So thank you. Have a lovely evening. And some of you, we will see you in the next edition because you're still going to be students. And others, feel free to get in touch. We're super happy to connect. And we might cross our paths in your future careers. So good luck to everyone. Thank you all, and enjoy your evening.
Thank you.
Bye-bye. Thank
Thanks,
you.
everyone.
Thank you.
Thanks, everyone.
Thank you. Ciao,
Thank
ciao.
you.
Thank you.
Thank you so much.
Bye, everyone.
Bye bye.
Everyone.